On the chain, something significant is taking place that hardly anyone in the mainstream crypto media is discussing.
So the numbers are there in plain sight, and they provide a narrative that has the potential to completely alter the landscape of digital assets.
The same early investors who saw ETA rise from less than $1 to thousands of dollars are now secretly selling their Ethereum holdings. However, this is not merely a haphazard sell-off, rather, it is a migration, a planned, well-coordinated flow of capital, and XRP is the obvious destination. Greetings from the Crypto Insights family, your go-to resource for all things XRP. To ensure you never miss what's going on behind the scenes in the digital financial revolution, take a moment before we start to hit the like button, subscribe, and turn on notifications. Let's now discuss what may be the most significant cryptocurrency transition of our time, the massive switch from Ethereum to XRP. On-chain data is truthful. Some of the biggest Ethereum wallets addresses that haven't changed in years have come to life in recent weeks. They started transferring enormous quantities of Ethereum, occasionally tens of thousands of tokens, to centralized exchanges such as Coinbase, Binance, and Kraken. Glassnode and Whale Alert analysts discovered several transactions totaling more than 20,000 ETH apiece that came from wallets used in the early days of initial coin offerings. Such whale activity typically signals a sell-off, but this time there was another concurrent event. Large amounts of XRP were being accumulated as ETH was deposited. For instance, within hours of the ETH inflow, one wallet bought approximately 200 million XRP, while another firm transferred 30,000 ETH or about $90 million to Binance. Blockchain investigators discovered wallet structures that overlapped, with a single unique identifier linking a long-dormant Ripple wallet to the Ethereum address cluster. Is it a coincidence? Not likely. It is impossible to overlook the pattern once you begin to connect the dots. Retail money chasing hype is not what this is. These are sophisticated investors who have access to institutional custody, sensitive knowledge, and deep liquidity. They are looking forward to the next technical and regulatory cycle rather than responding to FOMO. And one name keeps coming up when you look at the direction of that capital movement: XRP. Let's discuss the reasons behind this change. Despite its early inventiveness, Ethereum has fallen prey to its own success. Its user base has become frustrated due to high petrol prices, sluggish transaction times, network congestion, and ambiguity around its proof-of-stake validation process. Gas prices rise sharply during each bull market. With each significant DeFi surge, network throughput drops. With updates like the merge and deep sharding, Ethereum developers had long promised scalability. However, the outcomes are still disappointing. In the meanwhile, banks, payment processors, remittance providers, and institutions require compliance, speed, and dependability. They want a solution that works right now rather than taking a chance on future enhancements. This is where the XRP ledger and Ripple come into play. With nearly $0 transaction fees, 3-second confirmation speeds, and a decentralized consensus architecture independent of energy intensity, XRP was created from the ground up as a bridge asset, with the goal of facilitating settlement efficiency rather than speculation. We have a dozen more questions, and the demo will help you locate them. Before serving, there is a demo and spin, and we're anticipating, and now that Ripple has partially defeated the SEC in court, XRP has a regulatory advantage that no other significant cryptocurrency in the US has. Clarity is a must for institutional investors. The potential of regulatory gray areas is something they want to avoid. The distinction between decentralization and security classification has become more hazy as a result of Ethereum's shift to proof of stake, raising questions about staking rewards and possible SEC regulation. The whales are aware of this danger. Ethereum isn't being abandoned because people despise it. They are expanding into an ecosystem that is safer and more institutionally coordinated, and Ripple owns that ecosystem. Behind closed doors, Ripple has been forming alliances with payment networks, financial institutions, and central banks all across the world. The technology developed by Ripple is becoming ingrained in the global money flow infrastructure, from the Saudi Arabian Monetary Authority to the Bank of England. Going where the liquidity is headed next is easy math for the whales. The Flare network's airdrop is another incentive in the game. Flare, which was first introduced as an incentive for XRP holders, connects smart contract capability to the XRP ledger, so providing XRP with the same programmable power that made Ethereum well known. The combination of Flare's smart contract ecosystem and XRP's regulatory clarity offers Ethereum whales seeking return and decentralized financial opportunities, the best of both worlds. Without the hassle of gas fees or the risk of staking, they can continue to be exposed to DeFi. Now consider this capital rotation's macro effects. At the moment, Ethereum's market value is in the hundreds of billions of dollars range. The supply shock would be historic even if only a small portion of ETH's institutional liquidity moved into XRP, say 5%. More than half of the circulating supply of XRP is already held in escrow. Legends of price compression are created when massive demand and limited float collide. This is a fundamental reassessment of XRP's place in global banking, not a speculative push, and we're witnessing precisely this. Exchange data indicates that ETH exchange balances are falling while XRP buy pressure is increasing. While Ethereum open interest has remained unchanged, derivatives traders are growing their long bets in XRP. As you are aware, large liquidity providers are now incorporating XRP pairs into their high-frequency trading systems by modifying their risk models. This was not the case before to 2024. Digital wealth is being transferred between generations. Ethereum established the first empire of decentralized applications, but XRP is laying the foundation for the next financial era, which will be supported by national payment systems, real-world settlement, and central banks. By voting with their money, the whales are favoring efficiency, speed, and conformity over philosophy. Now let's zoom out. XRP against Ethereum, its heritage DeFi versus institutional utility, is no longer the main topic of discussion. Smart money is aware that speculative yield farming will not be the source of the next adoption wave. Governments, global firms, and international financial institutions looking for a smooth settlement process will be the ones to provide it. At the crossroads of that change is XRP. Furthermore, this change is not unique. Former Ethereum developers have subtly joined projects connected to Ripple on social media. Enterprise contracts that include XRP ledger integration are becoming more common according to analysts. In their frameworks for digital currencies, even the BRICS countries, Brazil, Russia, India, China, and South Africa, have included XRP. Although XRP is emerging as the foundation of decentralized banking infrastructure, Ethereum is still the dominant platform for decentralized applications at the level of the government. To be clear, this move does not imply that Ethereum is no longer viable. On the contrary, it will keep innovating, developing, and serving its community. The whales, however, are aware of timing. They are aware that assets that support the global financial system, not those that oppose it, will receive the next significant influx of cash. Now the bridge holds the potential, and XRP is that bridge. What does this signify for the price of XRP, then? First, analysts are urging a cautious reassessment. $500 per XRP becomes the natural milestone as liquidity floods in, not as a speculative moonshot, but as a calculated result of the desire for worldwide settlement. Recall that the value of each XRP might fluctuate by billions per day. Because of its design, the asset can manage volumes that conventional cryptocurrencies cannot. When you take into account cross-border remittances, institutional liquidity corridors, and digital currencies issued by central banks, $500 isn't just hype, it's math. Furthermore, Arthur Brito, a co-founder of Ripple, once claimed that XRP was built for a $10,000 future. That figure is related to the concept of global liquidity coverage and is not arbitrary. The upside is, well, exponential if XRP turns into the neutral bridge currency that connects trillions of dollars in global settlement value. This massive shift from Ethereum to XRP is about positioning, not choice. Today's whales recognize Ethereum's limitations and are making another pivot, this time into an asset that is in line with the next wave of digital currency. Much like early Ethereum investors realized the shortcomings in Bitcoin